Good morning, sir.
Okay. So let us start our session. I think some of you have already attended the physical classes, isn't it?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So since some of you are new, that means join the classes virtually. So we should brush up the last class. That means what we have already discussed so far. We'll brush up it first. Then we'll switch over to next. Okay. So here I'm going to share my screen. Just a minute.
Good morning, sir.
Okay. Good morning. Is my screen visible?
Yes, sir.
Yes, sir.
Yes, sir.
Yes,
sir.
Yes, sir.
Yes, sir.
Very good.
Good morning, sir.
Good morning. So let us start with our discussion. So here we are going to discuss about the fundamentals of accounting. Okay, or basics of accounting. So first we must understand the meaning, definition, and concept of accounting. Then we must understand what are the objectives of accounting, functions of accounting, how accounting is related with other disciplines. And next part we'll discuss about the accounting principles, concept, conventions, as well as the accounting standards. Okay. So let us start with our discussion. As I have already cited in our physical classes that why we need accounting. Accounting is very much essential in case of business organization. In case of business organization, accounting is very much essential. Why it is essential? Because we all are human beings. We are living in a society. Yes or no? So
Yes.
whenever we are living in a society, what we need languages to communicate with each other in order to express our ideas, our thoughts among each other. We need language. Exactly. For a business, the business language is accounting. Accounting is the language of business through which it can communicate various events, various reports, business reports to various stakeholders. Okay. So for the purpose of this accounting, we can say these are the various types of business organization. The business organization may be mercantilized or trading organization, or it may be manufacturing organization, or it may be service organization. So what is mercantilized or trading? Trading means, try to remember, buying and selling. Any organization or any business concern who is involving itself for the purpose of buying and selling of goods or services is known as mercantilized or trading organizations. That means these are those business concerns which are not involving themselves in the process of manufacturing. Okay. Otherwise, it is known as non-manufacturing organization. Coming to second one is about manufacturing organization. Manufacturing organization means these are those organizations which are involving themselves in the process of production. That means they procure some raw materials or inputs. So with the help of process, they will produce certain output. Okay. So this is the manufacturing organization. Someone is using annotation. Please mute yourself and don't use annotation. Okay. Okay. So try to maintain the decorum of the class. This is my sincere request to all of you. Okay. Don't behave like a small kid. So second category of organization is manufacturing organization. Manufacturing organization means they procure the raw material with the help of their process. They will produce the output, that is the finished goods. And the third category of organization is service organizations. So they render the services to the end users or customers. Okay. Why I am saying so? Because business organizations are cash generating machines. They generate cash by taking the funds or money. they utilizing in their various activities so as to generate more and more amount of cash. So that's why business organization is very much essential for the development of any nation. So in order to record the various transactions, events of the business, we need accounting, because accounting is the language of the business, through which we can able to communicate to various stakeholders. Okay. Again, business organization may be your private limited company, public limited company, or it may be limited liability partnership. Limited liability partnership means it is a kind of partnership form of business as well as company form of business. That is combination of partnership as well as company form of business. Okay. So these are the various types of business organization. As I have already delivered to you, accounting is the language of business. It serves as a means of communication. Why we can say that it is one of the language of the business? Because with the help of this accounting, the business can produce various business reports, and these business reports are utilized by various stakeholders. So it serves as a means of communication. What it communicates? It communicates the business reports or events to various stakeholders. Okay. So these are the two beautiful definitions given by American Accounting Associations as well as American Institute of Certified Public Accountants. So according to American Accounting Association, what is actually accounting? So accounting is the process Am I audible? Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of information. So what is accounting? It is a process. Why it is known as process? Because it involves the series of steps. Because whenever we are recording the business transactions, first we'll record in a set of books. After recording in a set of books, then we'll post them into another set of books. So after posting them, then we are going to prepare the summary statement. After preparation of summary statement, finally we are going to prepare the financial statement. So accounting involves a series of process.
Sir,
So,
sir, this
yes. Any question?
sir,
Good morning.
Good morning.
Sir, actually, I was telling that I am traveling in the train right now
Yeah.
from Gujarat to Odisha, actually for the office work. So, can I get the recordings back of the classes?
I think it is live streaming. It is available. Okay.
It will be available, sir. Afterwards, I can take
Sir?
from the local site. Can I take it?
Sir, hello, sir.
sir, this
Yes, please.
sir, this definition of
good morning, sir.
accounting-
Hello,
Good
sir.
morning.
Good morning, sir. Good morning, sir.
Good morning. Good
Sir,
morning.
sir, I'm Ashish Kumar Jana from Balangir, Odisha,
Yeah.
sir. Balangir. I'm also a job holder, sir. And actually, I have a issue regarding this. Sir, actually, ଆମର ଯୋଉ ଅନଲାଇନ ସେସନ ଷ୍ଟାର୍ଟ ହଉଛି sir, ଏଠି ଆମକୁ ସକାଳୁ 8ଟା ରୁ 10ଟା sir, ପୁଣି ସନ୍ଧ୍ୟାରେ 7ଟା ରୁ 9ଟା ପାଇଁ ଆମେ ଜବ ହୋଲ୍ଡର sir, ଆମକୁ ଟିକେ ଅସୁବିଧା ହଉଛି sir. ମାନେ ଏଟ୍ ଏ ଟାଇମ୍ ଟିକେ ମାନେ ବର୍ଡନ ହେଇଯାଉଛି sir, ଆମକୁ ପୁଣି ଡ୍ୟୁଟି ଅଛି, ପୁଣି କାମ ଅଛି, as usual ଆପଣ
Please
ଜାଣିଛନ୍ତି
remember.
sir.
Please remember these things we should not discuss inside the class because we should not kill our time. I would suggest you, Mr. Ashish,
I guess.
you just contact to coordinator of this program. Okay.
Sir, definitely.
Contact
Thank you,
the coordinator, so they will take care of it. Okay.
sir. Thank you, sir. Thank you so much. Please
Okay.
continue.
Thank you so much. Thank you.
Please
Everyone.
continue.
Good morning, sir.
Yes.
Sir,
morning.
ମୁଁ କହୁଥିଲି କି business organization under ରେ proprietorship firm ବି ଆସିବ କି?
Yes, madam.
Business organization under ରେ proprietorship firm ବି ଆସିବ କି?
Yes, madam. Various forms of business organizations are there. Trader, the sole proprietorship firm is there, partnership firm is there, joint stock company is there, cooperative society is there, Hindu undivided family is there. Okay. So,
Okay.
so many types of
Thank you, sir.
forms of business are there. Okay.
Okay, sir.
So, am I audible?
Yes, sir. Audible.
Okay. So let us discuss about the definition of accounting given by American Accounting Association as well as AICPA, American Institute of Certified Public Accountants. So according to American Accounting Association, what is the definition of accounting? Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of accounting. So try to remember, my dear friends. So accounting is one of the process. Why it is known as one of the process? Because it consists of series of stages. In order to get the final reports, final business reports like income statement, balance sheet, cash flow statement, etc. Okay. So it is a process. What we have to identify? We have to identify the transactions or events which are relating to business. Again, after identification of business transactions and events, we have to measure them. And whenever we are measuring, we must measure in terms of money only. No other dimensions of measurement. Okay. Again, after measuring, we'll communicate the economic information to permit informed judgments and decisions by the users of information. That means after measuring the business transactions, we have to prepare the books of accounts and we have to prepare the various business reports. That reports must be provided to the users of accounting so that they can able to take the various decisions in their life. So this is the definition given by American Accounting Association. But according to American Certified Public Accountants, accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money. Transactions and events which are in part at least of a financial character and interpreting the result thereof. What does it mean? Again, it is saying that accounting is the art of recording. So please remember, accounting is both art as well as science. Why it is known as art? Because in order to maintain the books of accounts, the accountant needs certain skills, certain ideas, certain knowledge of accounting. So that's why we can say accounting is an art, because without knowing the knowledge of accounting, you cannot record the books of accounts of the business. Okay, so accounting is the art. We can say accounting is also science. Why accounting is known as science? Because the simple definition of science you can just go through. What is science? It is a systematized body of knowledge which deals with cause and effect relationship. So whenever we are recording the business transactions, we are simply analyzing what is the cause and what are the consequences. So if in this particular transactions, two items are there, two accounts are there, what to debit and what to credit, we are analyzing, we are finding out the cause, along with we are also analyzing the consequences. So that's why accounting is known as also science. So accounting is the art of that means we have to record business transactions. After recording the business transactions, the similar type of transactions must be classified together, grouped together. And after grouping together, then we have to prepare the summary statement in a significant manner. Significant manner means, dear friends, please remember again, it consists of series of steps. And whenever we are recording these business transactions, we must record in terms of money only. In terms of money. So these business transactions must be financial in character. After that, we will prepare the books of accounts and we will interpret the result. So by taking the result of the business, the various users can take their decision. Let's say you are the investor, you are having some amount of money, some amount of surplus. You want to invest your money in that company by way of buying equity share, by way of buying debenture instrument, or by way of giving loans to that company. So your duty is to analyze whether the company is earning some amount of profit or not. What is the position of the business? That means whether you have to again analyze whether the business is sound enough or not, healthy or not. Then only you will take the decision. Yes, the business is healthy, the business is sound, the business profit is good, its earning capacity is also good. That's why I have some amount of money. I'm going to invest my money in this particular company. So this is the definition given by American Institute of Certified Public Accountants. So dear friends, whatever we are doing in the accounting, finally we are going to prepare the reports. That means income statement, balance sheet or position statement, cash flow statement, statement of changes in equity, as well as some explanatory notes. And these are the outputs of accounting. These outputs will be used by various users of the accounting in order to take various decisions in their life. You are the investor. You will think whether you are going to invest or not. Let's say I am a researcher. I am going to study the financial statement analysis of a company. So I have to analyze whether the company is moving in the right direction or not, whether the company is maintaining the adequate amount as per the norms or not. Okay. Again, as a banker, it will look about whether the business will able to or capable enough to repay back the money of the bank or not when it is taking certain amount of loan. Okay, I think someone is raising hand. Kritikari Mohanty sir, if you have any query, you just drop in the chat. Okay. Some of Animesh Sinha sir is saying that your voice is not audible. I think from my side, my network is okay, and my voice is audible to all of you, isn't it? Clearly audible. Very good, very good. Thank you so much. Thank you for confirming. Okay, chalo. So let us know why to study actually accounting. Whether it has some relevance in our life, yes or no? Yes. So these are the certain points. That's why we must read or we must study accounting. First one is personal life, second one is professional life, third one is investment for future, and fourth one is strategy. So these are the four reasons this is my personal opinion. I can say because of this four reason, we must study accounting. Personal life. So why we are doing business? Sorry, why we are pursuing MBA? If someone is asking us, our answer will be very simple actually. Either we may be the job seeker or we are going to be the job creator. If you will be the job seeker, that means you are going to be a manager of any company. If you are going to be a job creator, that means you are going to start your own startup, start your own enterprise, isn't it? So whenever you are going to start your own enterprise, own business, you must have certain knowledge about accounting, how to maintain the books of accounts, how to maintain the various records of the business. So you must have some sort of knowledge about that, some sort of knowledge regarding that. So in order to succeed in the personal life, to do the business, to take up any new startup, we must acquire certain knowledge about accounting. So this is all about personal life. Second one is about your professional life. Let's say you want to be a chartered accountant, cost accountant, company secretary, or CFA, certified financial analyst. So in that case, whenever you are going to be a professional, in order to provide the professional services to others, you must be master in accounting. You must have adequate knowledge in accounting. So in order to lead a professional life also, we need the knowledge of accounting. Again, investment for future. So we all Indians are conservative in nature. Why I am saying so? Because what we are earning, out of our entire earning, we are saving something at the end of each and every month. Let's say my total earning is 30,000 per month. Out of 30,000, I must cut out my pocket, so that my monthly expenditure is, let's say, 20,000 or 25,000. That means another 5,000 is my saving. So that 5,000 I can put in any investment avenue. So whenever you are going to put your savings or surplus in any investment avenue, you must have knowledge of accounting. Why? Because all investors wants maximum return, and they always wants to take minimum amount of risk. So we always want to take minimum amount of risk and to get maximum amount of return. So in order to choose this kind of investment avenues, you must have some sort of knowledge about the accounting. So you must able to know what are the profitability indicator of the business or profitability indicator of the concern or organization. On the basis of that, you will analyze whether you must invest your money in that particular company or not. Okay, so whether your investment is small or large, in order to take the better decision, you must have some sort of knowledge about accounting. Again, strategy. In order to formulate the various plan of action in your business or where you are serving as a manager. Okay, so you have to prepare the various strategies. So whenever you are preparing the various strategy, you should have some sort of knowledge about the accounting, because with the help of accounting, you can able to analyze what is the cost, what is the benefit. Okay, so on the basis of that, you will take the better decision and you can able to implement the strategy in order to succeed in your field. So these are the reasons. That's why we must study accounting. We must study accounting. Okay. So next, why accounting is known as an information system? Dear friends, you know, whenever we are talking about system, so system consists of these three elements or three components. One is your input, second one is process, and third one is output. So in input, what we are giving? We are giving some raw information or raw data, and this raw data process of main material, machines, and methods. And finally, we are getting the output. Why accounting is known as one of the information system? Because in accounting, it collects the information, raw information as the input. Again, it processes with the help of main and equipment, because nowadays various softwares are available to maintain the books of accounts. Various accounting packages are also there. So this raw information means raw data about the business, all the business transactions, all the business events. So these all are raw data, raw data or raw information. This raw data or raw information processes through various softwares with the help of main and other important resources of the organization, and finally we can able to get the various business reports and business information as output. So that's why accounting is known as an information system. So these are the outputs of the accounting information system. What we will get? We will get the financial statement. Financial statement, under financial statement, again various components are there. Your income statement or profit and loss account is there. Balance sheet or position statement is there. Cash flow statement is there. Statement of changes in equity is there. Explanatory notes are there. So these all are the components of financial statement. So we can able to get the output as financial statement. Again, we can able to get the statement about tax returns. What is the amount of tax the company is going to pay in this year? Again, you can able to get the various managerial data and reports, because within the organization, so many types of managers are there. Sales manager is there, your purchase manager is there, HR manager is there, finance manager is there, production manager is there, and other managers are there. So as and when required, they need various types of reports and various types of managerial data. So with the help of this accounting, they can able to extract their reports and their data, and they can able to take their decisions in the business. Okay, so managerial data and reports are also output of the accounting. Again, special reports are there. In certain cases, the business also needs certain special reports. Okay, and the special reports are also the output of accounting information system. Please remember. Okay, so next one is about evolution of accounting. Evolution of accounting. Okay. Someone is saying, sir, good morning, sir. Please go slowly. Okay, is it fast? Because these things I have already discussed in last two physical classes. Dear Mr. Biplab. Okay, because classes are limited. Another 8 classes, within 8 classes, we have to again cover up the entire syllabus. So that's why it is a difficult task for me also. Anyway, I'll go through slow. So if you have any query, you can ask me here. Okay. And someone is saying, Mr. Ashish Kumar Zena sir is saying, can I ask a question? What is your question, sir? We are not in the physical class. Okay. If you have any query, Mr. Kumar Jana sir, you can drop in chat box. Okay. Anyway, so let us continue with our discussion. So now let us discuss about the evolution of account. So dear friends, try to remember accounting is not new. It is as old as history. Because in old days, we can say in traditional era, the kings were also using various methods in order to maintain their books of accounts, because they were collected various revenues, and these revenues were utilized by them for the welfare of their society and welfare of the people in their kingdom. So accounting evolved from the traditional era to the recent era. So it has already changed a lot. So on the basis of this evolution accounting, you will see these 4 categorically, you can say these last three: financial accounting, cost accounting, and management accounting. These 3 are subfields of accounting or branches of accounting Okay, like let's say science is there. In science, physical science, chemical science, biological science, medical science, engineering science. So these are the branches. So under accounting, financial accounting, cost accounting, and management accounting, these 3 are the popular branches of accounting, or we can say subfields of accounting. So evolution of accounting started from the stewardship accounting. Actually, in old days, actually Mahajan Pratha and Saukar Pratha was there. At that point of time, also they were maintaining their books of accounts. Okay. Again, another subfields of accounting also emerged, like your financial accounting. So what is financial accounting? The main objective of financial accounting is to prepare and present the financial statements in a true and fair view manner. What is financial statement? Financial statement is the output of the financial accounting. So it will record all the business transactions and events through various processes, and finally it will get the financial statement. Then what is cost accounting? Due to limitations in financial accounting, actually cost accounting and management accounting, these 2 subfields emerged. So cost accounting deals with to ascertain the unit cost of a product or services. Let's say during a particular period, one organization, one manufacturing concern is producing 5,000 units and total cost is 50,000. So what is the per unit cost? So 50,000 divided by 5,000, we can able to get the unit cost, because with the help of financial accounting, we cannot able to get the unit cost of a product. And unless until you know the unit cost of a product, you cannot fix the selling price, and you cannot also predict what is the margin or what is the amount of profit you are going to generate in near future. And then the last branch of accounting is a management accounting. So management accounting deals with to provide the relevant information to the management. Management means top level management, like your board of directors or top level managers of the company, to take various business decisions and strategy implementation in the business. So management accounting provides all relevant information to the top level management in order to take various business decisions and strategy or policy implementation. Okay, so these are the various branches of accounting. Mr. Ashish Babu, you are asking, sir, we need previous year questions and its answer notes. Can you provide? That is available in the website for all this type of queries. I think your queries are purely related to the coordinators. So you just ask to the coordinator, PCP coordinator of your course, and you'll get all of your answer. So if you have any query relating to this financial accounting, you can ask me, please, Mr. Ashish. Okay. So these all are various subfields or branches of accounting. Okay. So here we are going to discuss about the first branch of accounting, that is the financial accounting. That is the financial accounting. So from the definition, I have already extracted. These are the functions of financial accounting actually. Just go through it. First, recording the business transactions. So financial accounting will record the business transactions. After recording the business transactions, the similar transactions can be grouped together. So second step is classification of business transactions. So this is another function of accounting, you can say. Again, summarization of business transactions and events. Summarization means what? Preparation of abstract statement to know the list of debits along with list of credits. So after that, it will prepare the financial statement where we can able to analyze and interpret the result. We can able to analyze and we can able to interpret. By taking all the business transactions, we can able to know the performance of the business. Like what is the amount of profit during a particular period? What is the position of the business at the end of the period? So we can able to analyze and we can able to interpret the result. So after interpreting the result, the same result will be communicated to the parties as users of accounting. Okay. So these all are various functions of financial accounting. So these functions are extracted from the definition that is given by AICPA, American Institute of Certified Public Accountants. Okay. Next, let us discuss about what are the objectives of financial accounting. So these are few objectives I have cited here. First one is to keep the systematic records. So dear friends, you know, we all are human beings. Our memory is limited. When we are operating our business, we cannot able to remember all the transactions in a particular period. That means during a particular year. So in a particular day, what are the transactions already done in the business, that must be recorded in a separate set of books. So it will act as the permanent record. As and when required, we can able to access this data, this information. Preparation of books of accounts. Okay. So accounting keep the systematic records. Again, to ascertain the net effects of the business, net effect means what is the net profit or net loss we are calling, whether there is net income or whether there is net loss. We can able to ascertain with the help of this financial accounting. Whenever we are recording the business transactions, out of business operation, whether we are getting any income or not, we can able to ascertain, we can able to know. So that is the net effect. Again, to ascertain financial organization, financial position means simply we can say it is the asset and liability position of the financial organization. It is the asset and liability position of the business organization. Business organization. Where we are and where we are. Okay, we can able to ascertain, we can able to know. Again, to provide accounting information to interested parties also. Who are the interested parties? We will discuss just later on. So try to remember, interested parties means these are the users of the accounting, end users of accounting, because they need certain accounting information in order to take various decisions. So accounting will provide the accounting information to various interested parties. So these all are objectives of financial accounting. Okay. Coming to next. Under objective, as I have already mentioned under the last point, that to provide the various accounting information to interested parties. So let us the interested parties. These interested parties are users of accounting. So the users may be external or it may be internal. So all are the external users like your investors or shareholders, lenders, debenture holders, suppliers, government agencies, employees, customers. So these, these all are external users, and board of directors, partners, managers, and officers are the internal users of the accounting. So by taking this accounting information, they can take this decisions in their own way. Okay. And nowadays, these are a few specialized accounting also there. Otherwise, you can say these are the specialized branches of accounting, like tax accounting, accounting, social responsibility accounting, investment accounting, human resource accounting, and nowadays forensic accounting also there. Forensic accounting is also there in order to detect the fraud which happens in the business because of the manipulation of books of accounts. So these all are various specialized field on accounting on the basis of specialization. Okay. Next, how accounting is related with other disciplines, that means other subjects, because accounting is very much correlated with many subjects and many disciplines, you can say. Accounting is related with statistics, because in accounting we are recording all the accounting information, and this accounting information can be represented with the help of statistics. Sometimes you can go for pictorial representations for better clarity of our result, in order to make the trend analysis of your profit, trend analysis of your sales, whether trend is upward or downward. We are using the statistics. So statistics is very much correlated with the accounting. Again, economics is also very much correlated with the accounting, because accounting deals with the financial transactions, and these financial transactions are purely based on the economic activity, and economic activity we are extracting from the economics. So it is also sometimes in our business also we are using the law of demand, law of supply, demand and supply function, in order to estimate the supply as well as the demand in the market. So again, accounting is also related with economics. Again, accounting is related with mathematics, because in accounting we are doing many more calculations, and this calculation we can do all this calculation with the help of mathematics. Okay. So likewise, so many fields are there, like law is there. So we are saying accounting is the language of business. We are recording the business transactions and we are preparing the various business reports. But whatever we are doing, or what are the various activities we are performing in our business, it must be under the purview of law. So that's why company law is there, business law is there, various acts and statutes are there. Yes or no? So law is also related with accounting. So accounting is related with many other disciplines. Okay. So next one is financial statement. Someone is asking, journal is which type of accounting? So till now I have not discussed about journal. So when we'll discuss about how to record the business transactions, at that point of time I'll discuss detail about journal. Okay. Sir, we are in class or reading contest. What happened, Mr. Bhavani? Where is your problem? I think you have not attended physical classes. So this in physical classes I have discussed all these things actually. So I got the information that a few of the students, they are new and they will join the virtual class. So I have to brush up the last class, what I have already discussed. So very briefly, actually, I am discussing all these things. Okay, you are not in physical. So where is your problem? Where is the problem? Simply, we are discussing about the basics of accounting. What is accounting? What are the functions of accounting? Why to study accounting? And how accounting is related with other disciplines. We have already discussed. Where is your problem? Can you tell me? You are saying, you are asking again how I know. Where is your problem? You don't know. My question is very clear. I have discussed many more things. That means definition, concept, your objective, scope, functions, and why to study accounting, objectives of accounting. So my question is, where you are getting some difficulties, or where is your problem? No. Okay. Anyway, so let us continue with our discussion. Very good. Again, Abhishek Raj sir, you are saying that, sir, we are new to class. We aren't attended physical classes. Actually, it's our first class. So that's why I am going from the scratch again. That's why these things I have already discussed in our physical classes. Okay, someone is saying that, sir, can you repeat the users of accounting? Try to remember, users of accounting means any person or any party who is using the accounting information to take some kind of decision, some kind of decision. So the users may be external user or it may be internal user. External users like your investors, shareholders, lenders, bankers, taxation authority, your creditors, debtors, etc. And internal users like your board of directors, partners, managers, or officers of the company. So these are internal users. Okay. So let us discuss about the financial statement. So try to understand, when we discussed about the accounting information system, so the output of accounting information system is financial statement, tax returns, managerial reports and data, and other special reports. Yes or no? So this financial statement are output of accounting information system. So when the data or the information passes through various process, finally we are getting the output. So financial statement is one of the output of accounting information system. So what is financial statement? So there is no unanimous definition available anywhere or under any books. But we can say financial statement means what? These are the formal records, or we can say permanent record of the business. Let's say in our life, we have already got our educations like your secondary, higher secondary, then senior secondary, then 12th or graduation, then post graduation, masters. Yes or no? In each and every stage, we are getting some certificates and grade reports. Yes or no? The certificates and grade reports are formal records of our life, permanent records of our life. Exactly in the same way, I can say the financial statements are the formal records or permanent records of the business. So a financial statement is a formal record of the financial activities of a business or other entity. Okay. So what are the qualitative characteristics of financial statement? We just discussed later, but just remember what are the elements of financial statement. So categorically, there are 5 elements of financial statement. Please remember, the first one is position statement or balance sheet. The second one is income statement or profit and loss account. The third one is cash flow statement. Cash flow statement. And the fourth one is statement of retained earnings. Otherwise, it is also a statement of changes in equity. And the last one is explanatory notes. So these 5 elements are there in the financial statement. Okay. So these are the qualitative characteristics of financial statement. Like first characteristics, it is saying that relevance. That means all the relevant business information or business transactions must be recorded in the business, and the financial statement must contain all the relevant information. That means irrelevant information must be ignored. And second one is reliability. Whenever we are recording any information or any business activities or any business transactions, we must record with some sort of reliable source. Some sort of reliable source. Let's say we are recording that our selling of goods is 5,000. So how we'll know that? How will ensure that we have already sold 5,000 rupees of goods? So whenever we are selling, we are providing bill to our customer. So duplicate bill is there, or invoice is there, bill is there, yes or no? So these are the reliable source. Let's say we are buying a particular machine for our business. So whenever we are buying, we are also getting the bills as well as warranty card, manufacturing warranty from the manufacturer. So these are the reliable sources through which we have to record all the business transactions. So financial statement must reflect all the business transactions which must be from the reliable sources. Again, understandability. Understandability means what are the information we are incorporating in the financial statement. It must be understandable by a common man. That means it must be very, very easy, and it must be understandable by others, where many people or the group of users can able to understand the financial statement, then they can able to use it in a judicious way to take their various decisions in their life. Again, comparability. Whenever we are preparing the financial statement should be comparable. Comparable means we can go for inter-firm comparison as well as intra-firm comparison. Intra means within the firm. That means current year performance we can compare with the previous year performance, or current period performance we can compare with the previous period performance, or we can compare our business performance with other business performance. That is inter-firm comparison. So the financial statement should be prepared in such a way so that it must be comparable. That means we can compare within our own performance within the organization, or we can compare our performance with other business performance or other entities performance. Next one, consistency. Consistency means what? What are the accounting methods, rules, regulations we are following? We must follow it consistently year after year and so on. We cannot change. So simply you can ask me one question, sir, why we cannot change? Yes, you can change. But if you want to change, then you have to follow these 2 conditions. The condition number 1, if the law of the country, that means act and statute of the country, is compelling you to change, then you have to change. And second one, if the change would give you the better preparation and presentation of financial statement, then only you can change. Otherwise, you can't change. Okay. So what are the accounting methods, rules, regulations, or procedure we are following? We must follow it consistently year after year and so on. Again, next one is neutrality. The financial statement must contain the unbiased and neutral data. We must not provide any kind of information in the financial statement which will have certain detrimental effect on various religion, caste, creed, sex, etc. So what are the transactions or events we are taking, or what are the information we are incorporating in the financial statement? It must be unbiased, it must be neutral. It should not create any harm to any religion, any species, or any sex, etc. Okay. So this is another qualitative characteristics of financial statement. Again, materiality. All the material information, immaterial information must be ignored and material information must be recorded in the financial statement. And timeliness, whenever we are preparing the financial statement must able to provide the timely information. As and when you need, as and when you require, you must able to get the information from the financial statement. That is timeliness. Again, verifiability. What are the information we are incorporating in the financial statement? It must be verified. It must be cross-checked. It must be verified or it must be cross-checked. Let's say one of your manager is claiming that my TADA bill is this much. Whether this is the exact or true amount of TADA bill. So you have to cross-verify. How you have to cross-verify? You just ask your manager to submit all the bills. That means traveling bill, your lodging at boarding bill, lodging at boarding bill, again your fooding bill. Yes or no? So on the basis of that, you can cross-check and what are the information we are incorporating in the financial statement that must be verified. Again, last one is prudence. Prudence means what? Sometimes when we are not getting any base or any what we can say, any parameter, so we can use the estimates to record the business transactions. There are some circumstances where we may not able to get any information relating to exact amount, or we can say exact information. In that case, we can use the accounting estimates to record the business transactions. So that is all about your full prudence. Okay, so these all are qualitative characteristics of financial statement. Qualitative characteristics of financial statement. Okay. So next part of our discussion is all about accounting principles, concepts, and conventions. So these principles, please remember, these principles, concepts, and conventions that can be used interchangeably in the accounting. Either it may be principles, concepts, or conventions. All are rules and regulations of accounting. Try to remember, all are rules and regulations of accounting. Why? Because whenever we are preparing the books of accounts, we must also follow some sort of rules and regulations. Because without following these principles, rules, and regulations, if we prepare the books of accounts, then we may not able to get uniform result. We may not able to get uniform result. Because in my last class, I have already delivered one example. Let's say same set of accounting information you are providing to 3 professional accountants. All are professional accountants, qualified chartered accountants. And someone is saying, sir, your profit is 5 lakhs. Someone is saying, sir, that you don't have any profit, neither profit nor loss. And someone is saying, sir, you have 10 lakhs loss in this particular period. Then who is correct, who is incorrect? So here I can say all are correct because all are professional accountants. Thing is that I have already supplied. I only supplied the accounting information. But here I have not supplied the accounting rules and regulations. If all the professional accountants will prepare the books of accounts, my books of accounts, by taking the same information with certain rules and regulations, then I must get a uniform result. Uniform result. So accounting principles, concepts, and conventions is very much required or very much essential for the professional accountants for the purpose of preparation and presentation of financial statement. Like whenever we are driving our vehicles, we must know what are the traffic rules. So whenever we are maintaining the books of accounts, we must know the rules and regulations of accounting. So these rules and regulations of accounting are known as principles, concepts, and conventions of accounting. Okay. So whenever we are going to record the books of accounts of any entity, these 3 fundamental accounting assumptions we must consider. These 3 are known as fundamental accounting assumptions we must consider. First one, going concern. Going concern means the business must be considered as the ongoing entity. It will continue its operations year and so on. Okay. And second one, consistency. Consistency means what are the methods, accounting methods, rules, regulations we are following, we must follow consistently year after year and so on, unless until there is a requirement of change. Next one is accrual. All the assets, liabilities, expenses, business expenses and incomes must be recorded on the basis of when they accrued, not on the basis of receipt and payment. On the basis of accrued, once they are due, we must record whether we have received it or not. So these three fundamental accounting assumptions we must keep in our mind whenever we are going to maintain the books of accounts of any business entity or business concern. Okay, so this is accounting principles. Whenever we are talking about accounting principles, so accounting principles are body of doctrines. That means principle of beliefs. These are based on the principles of beliefs commonly associated with the theory and procedure of accounting, that serving as an explanation of current practices and as a guide for selection of conventions or procedures where alternative exists. There are some rules and regulations developed on the basis of principles of beliefs. Last class, once again, I am saying I have also delivered. Whenever we are talking about the sun rises in the east, that means in which direction the sun rises, that direction is known as east, isn't it? So this is only based on principles of belief. Why? Because when I was a kid, my father, my parents, they have already taught me, beta, where in which direction the sun will rise, that direction is known as east. So this is our principle of beliefs, because our system is also developed on the basis of principle of beliefs. Exactly, accounting principles are developed on the basis of your principles of beliefs, which explain about the theory and procedures of accounting, where alternatives exist. Again, accounting concepts. So this is the basic assumptions concerning the economic environment in which accounting exists. These are the we have to follow certain assumptions where economic environment exists. Economic environment means where economic environment is there, we can say accounting exists. Okay. Another one is derived out of the usage practice accounting over a period of time. Last class I have already cited one example. Whenever we are talking about 1 dozen of banana, simply the number 12 is coming to our mind. The number 12 is coming to our mind. 1 ream of paper, that is 500 seeds. Yes or no? So it is derived out of the usage and practice of accounting over a period of time. So out of our custom, out of our usage, we are also developing some set of regulations or rules. These are coming under accounting conventions. So whether it may be accounting conventions, accounting principles, or accounting concepts, all can be used interchangeably in the business whenever we are maintaining books of accounts. So here I have already cited about GAAP. So the full form of GAAP is generally accepted accounting principles. So in each and every country there is a GAAP, generally accepted accounting principles. In India, Indian GAAP is there. In USA, US GAAP is there. So what is GAAP actually? A set of concepts, conventions, rules, and procedures. And these procedures, these rules must be accepted by the accountants over a period of time. Why accountants? Because accountants are the professional who prepares the books of accounts. So it must be accepted by the accountants over a period of time. If you are maintaining the books of accounts of any concern, business concern, that means you must be treated as accountant. So these generally accepted accounting principles provide certain guidelines to the professional accountants in the preparation and presentation of financial reports and financial statements. Okay, so these are the gaps. So here, these are list of accounting principles. There are some of the accounting principles which must be observed, which must be followed at recording stage. That means whenever we are recording the business transactions or business events. Again, there are some principles we have to observe at the reporting stage. Reporting stage means after preparation of financial statement. We have to follow them. Okay. So these are the principles to be observed at the recording stage like accounting entity, money measurement, objective evidence, dual aspect, realization concept, cost concept, accrual concept, and other principles who are followed at the reporting stage like going concern, accounting period, matching concept, conservatism concept, consistency, materiality, full disclosure. Okay, so these are the various principles or concepts. Out of these, some of the concepts or principles must be followed at recording stage whenever we are recording the business transactions, and some of the principles or concepts we must be followed at reporting stage. Okay, so these are the sources of accounting regulation of any country. That means in order to develop the accounting regulations, so these are the sources. In India, Companies legislation, you know, Companies Act, earlier Companies Act 1956 was there. Again, Companies Act Amendment Act 2002 was also there. Now Companies Act 2013 is there. Again, SEBI Amendment Act 2002 is also there, and accounting standards are there, and other companies laws are also there. So these all are various sources of accounting regulation. By taking those sources, we can able to develop the accounting regulations. Okay, so this Indian GAAP, this consists of a set of various pronouncements issued by various regulatory authorities. Predominantly, these Indian GAAPs are controlled by the Institute of Chartered Accountants of India. Okay, by taking this Indian GAAP into consideration, as the accounting standard board in India, they prepare the accounting standards. So these are the lead of accounting standard and accounting standard board. It has to follow accounting standard and propagate the accounting standard and persuade the concerned parties to adopt it, to implement it. Again, it also issue the guidance notes on various accounting standard, and it also provide detailed clarification about the accounting standard. And periodically, accounting standards are reviewed by the ASB for amendment, what we can say, corrections, modification, etc. Okay. So this is all about today's discussion. This is from my side. Someone is asking, sir, full form of GAAP, generally accepted accounting principles. Mr. Pratap Babu. Okay. Any more queries from your side? It was a great discussion. Aniket Babu, thank you so much. Could you please give the questions to prepare? You can download the question paper from the website. 3, 4, or 5 years question papers are there. Go through it. It will be helpful. Sir, can we have the PPT, please? I have already shared the PPT among physical students, so they can post in your group and you can able to get it. Sir, please say again the full form of GAAP. Once again, please remember GAAP, generally accepted accounting principles. Asking, sir, what is going concern? Going concern means whenever we are recording the books of accounts of any business concern, we must assume that the business is one of the ongoing entity. Business नहीं है, कलर बेचने का काम नहीं है, होली ओवर बिजनेस ओवर, दिवाली बिजनेस नहीं है, फोटा का बिजनेस, दिवाली ओवर, फोटा का बिजनेस ओवर, ऐसा नहीं है. Whenever we are talking about business, that means we can assume that it is one of the ongoing concern or ongoing entity. It will continue its operations year after year and so on. Okay. Okay. So, sir, can you please revise the elements of the financial statement? Sushant Agiri, sir. Try to remember there are 5 elements of financial statement. First one is income statement or profit and loss account. Second one is position statement or balance sheet. Third one is cash flow statement. Fourth one is statement of changes in equity, and fifth one is explanatory notes to accounts. Explanatory notes to accounts. Okay. Someone is saying, let me note 8 pro. Sir, please mention which chapter and unit are studying so that we can relate. Unit 1, definitely. Introduction to accounting or basics of accounting. Okay. So anyway, thank you so much everyone for joining with me. Have a good day. Stay safe and stay blessed. Thank you all.